Hello everybody, it's October 20th, 2011. In July of this year, I did a video when there was a partial audit of the Fed done, revealing $16 trillion in secret loans that were done during the crisis we had in 2008. And yesterday we had another partial audit that was released, and I have the Sanders report that I'll link down below. Totally going to blow you away. Enormous conflicts of interest. I mean, this right here is what I think, in my opinion, needs to be concentrated on by the Occupy Wall Street people. I haven't noticed a lot. I mean, I have noticed some stuff talked about the Fed. You know, in Austin, I believe it was, Alex Jones was filming where it said Federal Reserve System. Right there it had private property sign. And then he was somewhere else in Texas, and the police were telling the people they had to get off the private property. I mean, a lot of people don't know, they think it's a federal building, the Federal Reserve. It's private property. And that's one of the huge problems. We have a private central bank that's printing our money. They've caused all the booms and busts we've ever had since 1913. They do this by controlling the price of money, i.e., changing interest rates. And then also by pumping money into the system and taking it back out. They cause the booms and then they cause the busts. We can't have a private corporation printing our money. That's why we have the problems that we have. Wait till you hear what I'm going to tell you, was just found by the Government Accountability Office. I mean, totally mind-blowing. I mean, those $16 trillion in in loans by the Fed, secret loans, that was one thing. And supposedly I've heard it's all been paid back. Now, I don't know the validity of that, but now I know Ron Paul was trying to get a complete audit of the Fed, and if memory serves me right, at the last moment, all the Democrats jumped ship that had supported it and all voted against. So there would be no full audit. But we did get a partial audit around the time of the crisis, and this just came out. This is another portion of it. Enormous conflicts of interest that existed at the Federal Reserve during the financial crisis. The Government Accountability Office identified 18 former and current members of the Federal Reserve Board affiliated with banks and companies that received emergency loans, and the Federal Reserve during the financial crisis, including General Electric, JP Morgan, and Lehman Brothers. Many of the Federal Reserve Board of Directors own stock or work directly for the banks that are supervised and regulated by the Fed. Oh, how convenient is that? And then they have this thing where they grant waivers. You're going to hear of a waiver that was granted. Ridiculous. So, okay, we'll give you a little waiver here so there's no conflict of interest because you're here on the board and you're making decisions that help your own company. Totally ludicrous. I mean, and I don't hear of anybody being charged of anything. I mean, to my knowledge, no one's being charged of any wrongdoing here. I mean, we have execs using their influence on the Fed board to benefit the companies. Totally ridiculous, unethical, totally just, illegal. So I'm going to give you a few examples here real quick, and I'll put this Sanders report down below. If you want, leave a comment. I mean, I'll link up the whole 127-page report if you want, but this here, gives, you'll have an idea just by looking at this, what it is. But you're more than welcome to read the whole 127 pages if you like. A couple examples. Stephen Friedman, the former chairman of the New York Fed Board of Directors. During the end of 2008, the New York Fed approved an application for Goldman Sachs to become the bank holding company, giving its access to cheap loans from the Federal Reserve. During this time period, Stephen Friedman, the chairman of the New York Fed, sat on the board of directors of Goldman Sachs. Wow. Isn't that interesting? And he owned shares of Goldman Sachs, something that was prohibited by the Federal Reserve's conflict of interest regulations. Oh, but we'll just give you a little waiver on that. Mr. Friedman received a waiver from the Fed's conflict of interest rules in late 2008. How convenient. This waiver was not publicly disclosed. Of course not. Just as I'm sure everything else isn't disclosed that we would all like to know about. After Mr. Friedman received this waiver, he continued to purchase stock in Goldman Sachs between October 2008 and January 2009. According to the Government Accountability Office, the Federal Reserve did not know that Mr. Friedman continued to purchase Goldman Sachs stock after his waiver was granted. Oh my gosh, totally unbelievable. Let's get a little more light here. My last example of what craziness that's going on and needs to stop is Jamie Dimon, CEO of JP Morgan Chase and board director of the New York Fed. Jamie Dimon served on the board of the Fed. At the same time, his bank received emergency loans from the Fed, while his bank was used by the Fed as a clearinghouse for the emergency lending programs. In March 2008, the Fed provided JP Morgan Chase $30 billion to acquire Bear Stearns. During this time, Jamie Dimon was successful in getting the Fed to provide JP Morgan with an 18-month exemption from risk-based leverage and capital requirements. Dimon also convinced the Fed to take risky mortgage-related assets off of Bear Stearns' balance sheet before JP Morgan Chase acquired this troubled investment bank. They have one other thing in here where they're comparing the Federal Reserve to other central banks. Compared to other central banks, the Fed does not do a very good job disclosing potential conflicts of interest, which are essential and to the effective, credible functioning of a healthy democracy. Well, we know that. They don't care. If they cared, they wouldn't have ran the dollar down from $1 in 1913 to like 2 cents now. I mean, they're the whole problem. Can't look to them for solutions. The Central Bank of Canada requires its directors to disclose any potential conflicts of interest as soon as they're discovered. Well, not the Fed. Avoid or withdraw from participation in any real, potential, or apparent conflicts of interest. Well, not the Federal Reserve. The Central Bank of Canada also prohibits its directors from having affiliations with entities that perform clearing and settlement responsibilities. Yeah, well, that makes sense. I mean, that's... I guess doesn't make sense to the Federal Reserve. The European Central Bank, Central Bank of Australia, they both require directors to annually disclose their financial interests. For the Federal Reserve, not just hand out little waivers to everybody, it's totally mind-blowing. Just totally pisses me off even just telling you about this. The Fed has tripled the monetary base by buying treasury bonds and mortgage-backed securities through 2 rounds of quantitative easing. And the banks aren't really lending right now because the monetary base has been tripled. So, we don't really have the money supply has actually went down and has come back up a little bit, kind of where it was 3 years ago. The money supply won't really take off until there's all the lending. Because all money is debt. So once they create the debt, then the money, the velocity, everything will pick up. Now, I don't know when that's going to happen. If it is, I hear people talking right now about deflation. We're going to go into deflation before inflation. I don't know. Ultimately, I believe we're going to have huge inflation. What are they going to do? I mean, they have all this mortgage-backed securities that they bought. All this worthless paper that the Fed bought, and with the housing market the way it is, what's that stuff worth? I mean, they need to pump up the housing market bubble again if they want to be able to offload these mortgage-backed securities. So what's the solution? One potential solution, in my opinion, is to have competing currencies against the US dollar, which is, you know, in this death throes. Why not throw gold and silver alongside with the US dollar so that they compete? So you can hold something and save in something that actually has intrinsic value, not in some fiat currency that, you know, is losing value because of real negative interest rates. You're losing. If you're a saver, you're a loser. Just like Kiyosaki always says, savers are losers. Well, that's because they're saving in paper, and we should be able to save in real money, which is gold and silver, and we have to find a way to go that direction.